Hey guys, so today's Thursday, September 24th, and this is my portfolio today. I'm up $74 for the day, 45 during market hours, and almost $30 after hours, after the market closed. So compared to yesterday, I'm a little bit under. Compared to yesterday, even at compared to yesterday at open, so more compared to like Tuesday at close, I'm still under about like 40-50 bucks. So let's just take a look at what happened. Sony went up 40 cents. I think they went up 40 cents because there's news that there's going to be more pre-orders available, and it seems like it's not the end of the world if you didn't get a pre-order the first time for the PS5. I did hear that they're going to be having pre-orders for GameStop, I believe, tomorrow in the US and in Canada, and then another retailer in the UK. I'm not sure about anything else. That's what I heard, and so that's probably why they bumped up a little bit. So today's return was almost $15. Nike pulled back a little bit today. I'm not quite sure why. People probably just shorted it, tried to cash in on some quick money, taking into account that it shot up from Tuesday to Wednesday. So yeah, people just probably cashed in on some gains there. Microsoft, what happened to Microsoft? Went up a little bit. Yeah, I mean, Microsoft's always good, right? Even when they go down, I'm never actually worried about Microsoft. Microsoft knows what they're doing. Apple went up a bit. Why did Apple go up? Exactly. Maybe, I don't know. I have no fucking idea why Apple went up. I do know that there's been more leaks and rumors about their new phone coming, I think this next month. And I know that they made they did like a questionnaire or whatever. They did like a poll, and 50% of iPhone users said that they might that they're definitely going to get a new iPhone this year. So we'll expect their earnings to shoot up probably for the last quarter. Tesla bumped up a little bit after 2 days of pullback coming from Battery Day. A lot of people were disappointed for Battery Day. So this is exactly what I was talking about, right? When I mentioned in my video from yesterday about how it's smarter to average in because you can't time the lows or the highs. So it's better if you just average dollar average in and buy little by little when it pulls back. So if you had bought some yesterday, right, at like 350, or well, it's kind of hard at 350 because that's market open, but at like 370, like you would have went up, you would have had some gains today. And if you believe that they're going to go even higher, then if you buy some now, you'll have gains in the future, as opposed to throwing $10,000 at this from the get-go and then not knowing what's going to happen. You can kind of go little by little, right? Let's look at my TD Ameritrade. I only have Microsoft, so I should be positive for the day. Yeah, so I'm up $25, so that's not bad. So TD Ameritrade does a little bit better about giving you news that are not so mainstream. I know Robinhood kind of regurgitates kind of more mainstream news or whatever, but Microsoft is good about kind of giving you actual, I guess, things that it's not really well known. They got like the very inside scoop of it's a little more technical on Ameritrade, and Robinhood it's more about like the mainstream, because Robinhood is more geared towards investors that don't know a lot like me. So as you can see, at some point today I was up $130, and then as the market always tends to dip afternoon. It'll start high like at open, and then it'll kind of dip because people cash in on gains, and they usually get their trades in because the market's volatile in the morning. So, and they'll do the same thing around midday. They'll do another trade because it's less volatile, so they'll play with that kind of sense of security. The volatility goes down, so they'll get some more trades in for noon, and that'll be the end for the day. So they'll cash in on some gains and stuff like that. But I'm not a day trader, so I wouldn't know anything about that. What am I at overall? I think so I'm under 8K. As you saw yesterday, I was a little bit above 8K. So you can see here the futures for tomorrow. They're kind of sideways. I wouldn't say they're very up. That doesn't look very up to me. I would just say they're kind of just stale. But we'll see what happens tomorrow. And so yeah, this is my portfolio, and those are my positions. I'll have my link in the description if you guys are thinking about opening up a Robinhood. Like I said, I don't know anything. I don't know what I'm doing. But I'm learning, and this is something that will stay with me for the rest of my life. So it's a very good thing to know. And just kind of looking at the market, it was a green day, so for a lot of companies. So there's nothing in particular that I did, or I have no secret sauce to what I'm doing. It's just there's green days and there's red days, and today happened to be a green day. And you just got to invest in companies that you feel are safe. Speaking of a company that's not so safe, I think it's Tesla, but I think they're a really good hold for the future. Like I mentioned in every one of my videos, I don't want it to be the majority of my holdings of my position because of the volatility and the risk. If I did happen to lose money, I have all these other options, right? To kind of give me some cushion. I have Sony, Nike, Microsoft, Apple. If any day or in the future my investment in Tesla, doesn't pay off, I have that to fall on, because Tesla is a risk. They're kind of still they're not they don't have technology that's just way out there, right? They kind of just have innovative ideas, but their technology will get there. Look, I would say this, in terms of investing in Tesla, it shouldn't be the majority of your portfolio. I would say probably don't exceed maybe 20%. If you happen to lose, 20% loss is not, you're not going to lose 20%, you're going to lose all of it, right? It'll probably be like a 5% loss, and you'll still have 15% of your equity if everything goes sideways 10 years from now. But the rest of your portfolio, the rest of that 80%, should have enough gains to cushion that fall. But if you do really believe in what they're doing, and you really believe in the innovation, have faith that it will get accomplished, and that they will hit their numbers, hit all the millions of cars that they think they're going to produce, 20 million cars by 2030 or 2027 or whatever. If you believe in those numbers and you think that they can get there, then I don't know, that's up to you to decide. But just keep in mind that the reward won't be as high because they don't take a majority of your portfolio. So more than just seeing the possible gains for any company, you have to think about it with a cold mind, a cold head, because if you're heated and you look at the possible growth of, let's say, American Airlines, right? Holy shit, you know, when the pandemic goes away, American Airlines is going to get back to $50. You know, they might not, right? So don't look at potential gains. Look at how much debt a company has, how much cash they burn, how much profit they make, and stuff like that. You got to think about it in a more technical sense, even if you don't know exactly how to read charts and things, right? You have to think about it in more rational terms, and just be smart about your trades. So right now Tesla has 3% of my portfolio. I want to make it maybe, I want to say maybe 10% of my portfolio. I think Tesla's a better hold than Sony, but I want the holiday season to kind of blow over first, and then kind of think about reducing my position with Sony after the PlayStation 5 kind of cools down and stuff like that. Maybe I want to say like post-January, post-February, after the holidays. Probably reduce my position in Sony and increase my position in Tesla, and preparing myself for a really long hold, like 10-year hold or 7-year hold or something like that. I really want to hold it for more than 5 years. I don't know how much faith I do have in Sony, because they don't have, I have short-term faith in them because I feel like they can put out a lot of units, and in the way I see things, they're probably going to outsell Microsoft a lot, but they don't have like a continuous stream of income from PlayStation like Microsoft are kind of preparing to do, you know, from Game Pass and their X Cloud or whatever gaming thing that they have going on. I don't know if Sony can compete with them in that way, in terms of like a subscription based revenue every month and every quarter and stuff like that. But if Sony moves enough units and people start to go a lot digital, that will definitely bring down the cost of selling games, because they won't have to make as much physical games, and it could just be digital, and that could generate more profits. So I think last generation, or the PS4 and the Xbox One, Sony outsold Xbox in a ratio of 2-1. So if they can make that ratio even bigger, that's potentially enough units where people just go digital anyway, and they can make profits that way. They'll make profits either way, right? But we're just looking at ways they can make even more profits. But yeah, I want to get to 10K by January 1st, and then, you know, kind of just see what happens there. I know my portfolio isn't huge, and I kind of just want to document this the whole way through. So if you guys ever, you know, see me I wish I would have done this from day one, to be honest, because I started out with nothing, right? And it's not like I've made a ton of money, but there was a point where the market did hit a high, and I was up maybe 1,000 plus, right? Which I didn't cash in on because I'm a long-term investor or whatever. But if Apple hits a new high, right? If Apple hits a new high, which their high was like 134 this year, and if they hit a new high, and if Microsoft hits a new high, which is higher than that, right? That's what we're talking about, a new high, in the near future, which is like $25 more, per share. And if Sony hit a new high, which is like almost $6, $5-6, you know, I'm in a pretty good position here. I'm gonna be making a good chunk of change. I also have two stocks of Sony and Webull, and I kind of don't really do much of Webull, just because I don't know how to understand that. I don't understand the analytics and stuff like that yet, but I'm hoping I do soon. As you can see here, I mean, their data looks amazing, but it's just unfortunate that I don't know how to read it yet. I do know that TD Ameritrade offers like classes to read charts and things like that. And they're free, so I might sign up for that. I might make my girlfriend do them too. Because two heads think better than one. But yeah, I mean, so I'm still north of 8,000 considering the ones that I have in Weeble. But if you guys are on the fence of whether you want to invest or not, these videos are mainly for that. So just so you can see my journey and what happens. And I make videos regardless if I'm in a green, if I had a green day or a red day, because I want you to see the truth. I'm not going to sugarcoat anything. That's the whole point of this. But yeah, so just check out the description if you want to get going and kind of just prepare for your future, I guess. And yeah, so don't forget to like and subscribe. And if you guys have any questions, just let me know. I'll be more than happy to answer them.